But right now, for you as an investor, the opportunity is to actually take advantage of these properties that are coming to the marketplace at a fraction of their price. They're not only coming to the market at a fraction of their price, but they're actually being paid for by the tenants. So they're cash flow positive day one. Getting tongue-tied here trying to get all this information in. So they're paying for themselves. So you're buying a property for $20,000, say, that was worth $150,000, $170,000. You're buying it for $20,000. You can leverage from the bank as well, so you can get even as an international investor, you can get a loan from the bank, and we take care of all that side of it for people that want to do that, or people can actually just invest on a cash return. It doesn't matter to us. But what we're suggesting is that you need to be doing something, because this opportunity that's come available in the US, where there's literally stress in the streets, there's panic in the streets, people are having to get out, that's when you buy. Did you cause the stress in the streets? No. You know, we're considerate of that that's what's happened, and that's not a nice thing to happen, and we wouldn't want it to happen here or to anyone that we know, but it's happening. That doesn't mean that you just sit there and say, well, look, I'm really sorry that that's happened to you. You take advantage of that because that's there, and you actually make it your goal to generate your wealth, and you can generate significant wealth. As the market starts to climb back out in the US, which is going to happen, it's predicted by economists and investors like Berkshire Hathaway, Warren Buffett and those people of the world, to climb back out over this next 12 to 18 months. That's a good time to buy, because it means that the prices of property have come down anyway and they're nice and low. But it means because they're paying for themselves, even if the growth isn't in the property over the next 12 months, does it really matter to you? It doesn't matter, because it's paying for itself. If it wasn't paying for itself, it would matter. You wouldn't want that. The best thing about the US too is you lock your rates in. Lockdown doesn't change. Know what your costs are. Figure this. You buy a $20,000 property. You get a 70% loan on that property. Yeah? $14,000. So you've got $6,000 in the deal. You've got $14,000 worth of debt, and it's on 4 to 5% interest rate. 4 to 5% interest rate. $700 for the year. Let's just say that's what it costs, without your establishment cost of setting the loan up, which is $600 to $1,000. Let's just say you've got a $700 cost now to pay, to maintain that property on the debt. You're getting $9,600 a year in rent on these properties that are valued in that regard. So they're so cash flow positive in your favour that you're putting cash in your pocket. You've got the banks leveraged, yeah, and the dollar between Australia and the US is so good now, it's a great time to do it. And as inflation happens in the US, because it's going to go double-digit inflation in the US and the population is going to continue to increase, rents are going to continue to climb. Because there's more people coming out of property, owning of property, and they're having to still live in a home, so they rent. Yeah, so that drives the rental market even further through the roof. And this is exactly what's been experienced to some degree in Australia, but not to the same level. So here's the opportunity for you as an investor. The opportunity is that you need to get into the US market, and you can absolutely clean up in the US market right now if you know what you're doing. If you don't know what you're doing and you want to do that, then I suggest that you actually speak to us, and we can help you, because we have a team on the ground that take care of everything. We view every property, but we have to buy on the spot. Right? So this is how it works, and I should explain this. Anyone wants to do anything in the US, you have to have the cash available now. Yeah, it's available now. You need to put the deal down. When you see the foreclosed property, when you're walking through the property, and you say you want to do that deal, you have to have the cash to do the deal then, on the spot. You don't just say, look, I'd like to take this and I'll come back to you in a week, because 5 minutes later that you've decided that that's your thinking, someone else has already bought it. That's how quick it's moving. So you have to be Johnny on the spot. You've got to be there. You've got to see the property, critical, which is what we do. You've got to make sure that all the reports and everything around the title stack up, because there's also things like tax liens and junior liens that can be applied to property over there, which means that the property carries further debt in the future, that if you buy wrong, you could actually pay $20,000 for a property but end up with a $70,000 debt on it through tax liens and costs that have been associated to the property that haven't been paid by the previous owners. We can insure around all that, so there's no issue in that regard. What I'm suggesting, though, is that if you did it on your own, you don't know what to do, you're going to fall into that trap. So you don't want to fall into that trap. Okay, so by getting into that marketplace, securing property now, or turning property over, buying $20,000 property, was worth $150,000, $170,000. Could it go to $40,000? Absolutely. Could it go to $60,000? Absolutely. Could it go back to where it was previously? Yes. But if it's paying for itself at 20, you don't care how long it takes to get there. But if it gets there, and it gets there in 6 months, 12 months, 2 years, 5 years, still paying for itself, and you have now got cash gain in your pocket, and you've also got leverage from the banks, and you've also got earnings in US dollars, and you've also got capital growth, you can't go wrong. I honestly can't emphasize this enough. If you are looking to invest anywhere right now, I would not invest in Australia. And I have done serious investment in Australia, and I'm not investing in Australia right now. I'm investing everything in the US because I cannot create the same deals. It's just not possible in Australia. Over there, creating deals that where you can actually create chunks of cash really quickly. Buy cheap, turn the property over, put $20,000 in your pocket, US dollars in your pocket. Okay, so this is what we can teach you. If you're interested, you need to get in contact with us. You need to speak to us. We don't take everybody on. We will only take people who are serious. The reason is because we have to be committed to what we do when we're there. When we see the deal, we have to make the deal happen then. Yeah, so I don't want people that are going to be pussyfooting around deciding whether they want to do it or they don't want to do it. You either know you're going to do it beforehand, we submit the information forward and you do the deal. If you don't want to do the deal, don't do the deal, we'll take the deal. So what I'm saying is though that you'll only ever see properties that we would buy ourselves and that they stack up rentals wise, condition wise, in the right markets, so far undervalued it's not funny, so you're going to get all the upside. Hope that makes sense. That's what's happening in the US market. Really bloody exciting market right now. I urge you to actually find out more. Hope to speak to you soon. If you do want to catch up with us, use the subscribe details on this form or go to the Wealth Club link at the top. Click on that, submit your details, and we'll come back to you and have a chat. Cheers and bye for now.